Hello, thank you for joining me. This is Christine Thompson, lead agent on the CT team. And I'm sharing with you today Kevin Napoleon, highly knowledgeable lender. We've been doing weekly shows just about every week. And Kevin, you had a great lunch and learn at our office. And I thought it was a great topic. So I thought, you know what? I think I would like you to talk about this with people because it's something that they probably aren't aware of or don't understand all the details. And it was about bridge loans. And I know they've been around a while, but what's happening with bridge loans today? And what does that mean to a buyer that might be considering that? Or what kind of options does a bridge loan give to a buyer?
Sure. Hello, Christine. Yeah, it was a great topic to bring up because bridge loans is something that seemingly is talked about quite a bit, but no one really understands what they are and how they function, or more importantly, what type of client they're geared towards. So a lot of consumers think that if you have a little bit of equity in your home, then you just get a bridge loan, then boom, you go out and buy another property. They don't realize you have to have pretty good income because not only are you trying to finance the property that you're buying, but you're also holding on to the property you currently own and you're getting another loan for your down payment. So there's kind of three loans involved for a lot of these types of transactions. So, but just kind of back up a little bit, a bridge loan is basically a mechanism or a resource to use the equity in your home. You can borrow that and use it as a down payment on a new property, or if you have enough equity, you can just pay cash for the new property outright. So
how can a bridge loan help a a buyer if they're up against multiple offers? Will that help them? Does it allow them to say that they're making a purchase not contingent on a mortgage? Because they are still, right?
Yeah, there's two main benefits to a bridge loan. In this market, they've become fairly popular to talk about because of the non-contingent ability you have with a bridge loan. So you could buy a house without being contingent on the sale of your existing house.
Even though they're doing the bridge loan.
Yes. Yeah, so you're contingent on qualifying for a loan. Just like anyone that's making an offer of getting financing, it's still contingent on that loan approval. So this is that same concept. They're just not contingent on finding a buyer and closing on the sale of their house.
Right, which is huge. It's huge when there's multiple offers.
Yeah. Plus, it also makes that transition easier. So people don't have to worry about selling and buying on the same day and having all the movers coordinated and everything else, which is stressful for a lot of people. So it's a seamless move. You can buy the new property, move in slowly at your own pace, and then go ahead and sell the existing property that you just moved out of. So it's a little bit easier for a lot of people.
Sure, for sure. Yeah, and is there any extra paperwork that's required to apply for a bridge loan?
Well, it's a separate type of loan. So we would be working on one loan concurrently while we're also submitting a file for the bridge loan. So it's not any extra paperwork, it's just more of a duplicate process. So we have kind of two loans going in a different direction. One's for the equity in their house and one is for the new property. So it's almost kind of like getting a line of credit on your house. That's kind of what that is. And we're utilizing a chunk of the equity in the existing house to transfer it over to the new property and use that for a down payment. Or sometimes you can split it up and use some of it for a down payment, also pay off some existing debt to help people qualify. Sometimes they have student loans or car payments, whatever it is, we can use the equity to satisfy that and spread their income a little bit farther.
What's the difference between someone saying, I'm going to get a bridge loan, or I'm just going to get an equity line of credit on my house and borrow from that HELOC? What's the difference? What's the advantage of either?
Yeah, there's a couple of variations of bridge loans as well. So some banks, some companies might have their own interpretation of what they want to call a bridge loan. But in terms of the program that we would work with, they're kind of almost identical to a home equity line of credit. The one big thing is if a consumer were to go to a bank today and say, I want to get a line of credit on my house because I'm going to use that equity to buy a new house, the bank would say, no, we don't allow you to do that. So in this case, we essentially have a contract with a local bank that we broker these loans to that have a program set up exactly for that. So they allow people to pull the equity out for the purpose of buying another property. So to answer your question, though, really, there's nothing that's going to be much different. So if I was talking to someone that was thinking about buying a property and utilizing a bridge loan in, let's say, 6 months from now, I would tell them, hey, you may want to get a line of credit on your current house, because then you already have that in place. You don't have to worry about getting a separate loan.
Right.
It'll already be done, and it's cheaper to get a home equity line of credit than it is a
Okay.
bridge loan. So bridge
Now, when you
loans,
say cheaper, is there more fees with a bridge loan or just higher interest rates?
yeah,
How is it
both.
more expensive? Both.
Both.
Okay.
So bridge loan is kind of a spur of the moment. I need the money now to buy a new property. So
Gotcha.
for that real short-term loan, it's got to make sense for a bank to want to lend that money to you, right? I mean, they're in it to
Okay.
make money. So
Right.
if they're going to do possibly a 1 or 2 or 3 month loan, they're going to have some extra cost involved. There's a
Mhm.
regular closing cost for some of those bridge loans as well. And the interest rates, unfortunately follow what the Fed's been doing over the last 6 or 8 months. And some of those rates could be in the 9, 10, 11% range, depending on how much equity you're trying to pull out, even though it's short term, right? You're not paying
Yep.
interest for a whole long period of
Right.
time.
It's not like 10 years or 30 years of that. Yeah.
Right. It's only a handful of payments, but you have to qualify for it. And you still have to carry that debt with all the other debt you might have.
Mhm.
Whereas a home equity line of credit usually doesn't cost anything to establish. And if you wanted to close it out after you sell your house, which you would, worst case is you might pay a cancellation fee, which might be in the hundreds of dollars, $3, $4,
Yeah.
$500, which is easier. So,
Mhm.
one big thing I like to point out about who would a bridge loan be good for? So that's the topic that we talked a lot about. It's not necessarily for everybody. It's good for people that have two things: a lot of equity in their home and a lot of income. So if you're tight qualifying, this isn't going to work, because now you're trying to qualify for 2 loans instead
Right.
of just
Yeah.
1 loan. So good amount of equity and a lot of disposable income that you can qualify for dual housing payments plus another loan to take the equity out of your house.
Mhm.
So that's where a lot of consumers get a little bit kind of bummed out, because someone says, hey, just get it, slap a bridge loan on there and you'll be good to go. But they don't realize there's a, it's a little tougher to qualify for some.
Yeah. And I'm just thinking out loud here, if somebody says, well, then I'm just going to get the home equity line of credit and I'm going to use that money to help put towards purchasing the next house. And then I'll close out that HELOC and everything when I sell the current house. Is having the HELOC going to affect them when they're trying to get that loan to buy the next house? Are they going to look at that HELOC and say, oh, they have access to money? Because, they're only going to use the HELOC well, I mean, they're going to take a chunk out of that HELOC to help pay for their down payment or whatever on the next loan, right?
Sure. Yeah. And they're going to look at that as debt. So it is an open
Yeah.
line of credit that they're going to utilize for a down payment. So we have to count that payment against them.
Mm-hmm.
So again, they still have to have decent income, because if they have a loan on their current house, plus they want to get a line of credit, plus they want to finance a new house, that's 3 loans, and you have real estate taxes for both properties.
Yeah.
So that's why it's important to have these conversations up front before you sign a contract to buy a house, and then try to figure out something that could be somewhat complicated. So we talk through all these options with them. Sometimes a bridge loan isn't the best option. Sometimes a line of credit isn't the best option. Sometimes people don't realize, holy cow, a family member is willing to give me $100,000 for a down payment. I'll just pay them back when I sell the house. That would be an ideal situation.
Yeah, exactly.
Or a 1K loan. There's a lot of other ways to come up with some funding for a down payment. But bridge loan's good for people in the right position, the right situation.
Yeah. And if they're not, then they should plan ahead and get a HELOC.
Yes, absolutely. First of all, everyone should plan ahead regardless. So
they always have a HELOC, right?
That's what I would end up doing. If I knew I was going to buy a property later on down the road and there was a chance I might want to buy non-contingent, I would get that home equity line of credit in place today. You don't have to use it. You can let it sit there until you need to draw upon it for the down payment, or simply pay cash for a new property if you have that much equity in your home.
So when they're doing, let's say they do that, they set up the HELOC and they plan on using that HELOC for the down payment of a house that they're going to purchase. Let's say they say 6 months from now, we know we're going to be buying. So let's get the HELOC set up. We're not going to tap into it, but we got it lined up. And we're going to use that equity on our current house from the HELOC to use as our down payment for our next loan, right?
Yep.
you as a lender, you're going to say, where are you getting your down payment from? And they're going to tell you, I'm getting it from the HELOC. So they're going to see that's a debt
Yep.
that they have, right?
Yep. 100%. We'll see it on the credit as well. If it's not established yet for some reason, then we would ask them for the terms and conditions of that loan once they establish it.
And when you say it shows up on their credit, even if they didn't take $1 out of that HELOC, it just shows that they have a HELOC account and they're accessible to X amount of dollars. That's what you're saying.
Yeah, we'll see it on there, just like a credit card. We'll see what the limit is.
Yeah.
And then we'll eventually ask them what the actual term of the loan is. If it's a home equity line of credit, we need to know what the interest rate is on the loan. And then we would calculate a payment internally to count against them, assuming they're going to draw on it at some point. Well, it's usually interest only payment. So that's what most lines of credit are. So they're a little bit less on the payment side. The only real question we would have for a consumer is, can you tell us what interest rate you have on the loan? And then we would run a payment based on the limit they have. So if it's a $50,000 line of credit, then it's $50,000 based on whatever the interest rate is, and it's interest only.
Okay.
So it's a fairly standard payment calculation.
So that calculation is based on assuming they took the full gamut out, the full load out, and what's the monthly interest if they didn't pay it back?
Yep.
All right. This is good information. Is there any other facets of a bridge loan that you think a buyer would be asking about before we end this topic?
Not necessarily. It's just, it's a good talking point. You never want to say no until we exhaust the option. So we'll look at it and see if that's the best resource. There's enough equity, enough income. If we have to switch gears, then we'll look at some different options out there. But it all boils down to planning. Unfortunately, there's a lot of people that don't plan and they fall in love with the house and they haven't figured out anything else behind the scenes. And that's where you're left scrambling. Just like someone driving in their car with very little gas in the tank, you can't pick and choose which gas station you want to go to. You just have to go to the one that has the most expensive one right there. Right.
So you become more vulnerable to higher costs and whatever else is involved with that if it's last minute. Definitely. So if you're listening to this, take Kevin's advice and plan. Be sure to plan ahead, because buying a house is a really big purchase for yourself, a big gift you're buying yourself. But if you can shop it, go to Costco instead of Nordstrom for that gold ring, okay? That you can cut down on the cost and still get a quality loan. And Kevin's always available if you want to start making those plans. You can call Kevin or email him or text him. Kevin, what's the best way they can reach you?
The best way is my cell phone. It's area code 630-956-2648.
And what's your email address?
My email address is kevin.napoleon@mykeymortgage.com.
Thank you. We'll put that in the little copy under the video here so people can see it written too. So thank you for watching our weekly show with Kevin Napoleon. I hope you really enjoyed it. Please do share this with everyone that you know, so that way they can get this information too. You never know who you know that is thinking about selling and doing that bridge loan, so that way they can get good information and do good planning and get in touch with Kevin. Thank you for watching, and I hope to see you next week. You have a great day. Thanks, Kevin. I appreciate your time.
Thanks, Christine.
All right, thanks. Bye-bye.